Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 30th of July 2021 and we're publishing our regular morning update where we look at the latest news headlines, economic reports and precious metal prices. Today we see that in the last 24 hours gold and silver have continued to rise and the world is beginning to take additional measures to help prevent the spread of COVID-19 and its Delta variant. So let's take a look. Welcome to Illuminati Silver. Today, 30th of July, Friday, 09:12 AM GMT +1. Weather-wise, pouring with rain. Wind blustering through the trees, and the sky so overcast and dull. It's a rather depressing morning. But let's hope, those listening, there is a ray of sunshine for gold and silver prices. Let's take a look at the news. Bloomberg. Amazon's pandemic bump fades as vaccinated shoppers venture out. And this is all about, of course, Amazon's figures, which have been enormous, now starting to wane just a little because shoppers are now going out and buying goods from real shops rather than online. Bitcoin hits key test to make gains above $40,000, chart shows. But this is the important thing for all those who doubted the future of cryptocurrencies. This is now almost affirmation that they are here to stay. Germany to allow institutional funds to hold up to 20% in crypto. Let's take just a very quick look at that. Germany plans to allow certain institutional funds to invest billions of dollars in crypto assets for the first time. A law taking effect on Monday will let so-called Spezialfonds with fixed investment rules put as much as 20% of their holdings in Bitcoin and other crypto assets. The funds, which can only be accessed by institutional investors such as pension companies and insurers, currently manage about 1.8 trillion euros, or the equivalent to $2.1 trillion. Lawmakers worldwide have been slow to accept crypto assets whose valuations have whipsawed and whose markets are dominated by a small number of investors. The move marks a shift of the asset class into the mainstream and follows investments by some of the biggest names in the finance industry. Most funds will initially stay well below the 20% mark, said Tim Kreutzmann, an expert on crypto assets at BVI, Germany's fund industry body. On the one hand, institutional investors such as insurers have strict regulatory requirements for their investment strategies. And on the other hand, they must also want to invest in crypto. So this is it. Now the watershed. Many people believed that crypto's days were numbered. To allow institutional funds to enter into this realm certainly tells us that there is no government now, certainly any government allowing their institutional funds to invest, there is no government that will now outlaw Bitcoin or cryptocurrencies. Yes, they will try to regulate them. That is true. And that could have both a positive and negative effect on cryptocurrency assets. But bearing in mind that governments around the world, certainly in the Western world, which have moved over years from state pensions to encouraging people to invest as much in their own private pensions, would not like to see those pensions collapse because of any law they introduce that could bar cryptocurrencies and potentially for some major funds get rid of 20% of their investments. It's not going to happen. This is now for us, the watershed. that cryptos are here to stay. Which ones? That's another matter. Looking at Reuters, most focus at the moment really on COVID and the Delta variant. India reports most new COVID cases in 3 weeks. Sydney readies for the army as lockdown fails to squash Delta outbreak. BBC News, this is economic news. Dairy giant says driver crisis hitting milk supply. This is basically saying they've had to cut deliveries because people have had to stay at home due to positive COVID tests or this pingdemic where they've potentially come in contact with someone who has had or has reported as having had COVID. Empty shop numbers rise as COVID continues to bite. The number of vacant shops continues to rise after a year of lockdowns, the BRC says. And even with people now venturing back into the high street, there has definitely been a shift towards online retailing, which has been there, frankly, for 10 years, slowly developing. But the last 18 months has speeded up that process, so much so that even now people want to conduct meetings via Zoom or Microsoft Teams or a similar software package rather than jumping on a plane and travelling to see their client or their boss. And frankly, who can blame them? Looking at the world in general, this supports what Reuters has said. Australia sends in army to enforce Sydney lockdown. China battles worst COVID outbreak since Wuhan. President Biden calls for a $100 vaccine incentive. That's what we love about America. They keep throwing money at you. Crikey. In this country, you're just told you won't be allowed in a nightclub. In America, they give you $100. Looking at that, the US news, very similar. Are America's unvaccinated, changing their minds? And you can just see where the overall tenure of the news currently lies. So, how are the markets being affected then? Well, the dollar is marginally up, 91.86, but still well below the 93 or close to 93 it was recently. Mainly due to what was said by Jerome Powell on Wednesday. Oil marginally down, but still well ensconced in the $70 bracket, in the middle of that bracket. Stocks, America stocks up yesterday, around 0.4%. Again now approaching all-time highs. Overnight, Asia Pacific stocks broadly down. Fair whack actually. Nearly 2% in the case of the Nikkei, and European and Middle Eastern, East African stocks and UK stocks following suit, but not to such a great extent, down somewhere close to 1%. So it would not be a surprise to see the American stocks fall unless there's some interesting news. And what could that interesting news be? Well, if we just take a quick look, yesterday we can see that the initial jobless claims came in at 400,000 for the week, lower than the previous week, but a little bit higher than expectations, which so slightly disappointing though improving. Gross domestic product, first estimate is higher than the previous month, but lower than expectations at 6.5%. And the pending home sales index really has fallen dramatically for June. And this, to some degree, has helped precious metal prices because this jobs data, GDP, home sales, not as good as market expectations. Now today, very important, personal income, consumer spending, core inflation. Let's see how they fare and compare with estimates. And then just very quickly, let's have a look at gold over the last 24 hours. Gold is up $8, and on the weekend, in our weekly update, we'll talk about the progress throughout the week and how it's ended the week in terms of how it opened. Silver starting to creep back up 9 cents at 25.60. If we recall, it fell below $25 earlier in the week, so it's maintaining some gravity, but as we said yesterday, we're expecting it to oscillate really between 25 and 26. Cryptocurrencies still broadly up, and over the last 24 hours we've seen a 1.1 increase, and the total market cap has moved up from $1.55 to $1.57 trillion. Now, yesterday we produced 3 videos, our morning update, and then in the afternoon, gold and silver rise on back of FOMC announcement, where we highlighted more or less what went on at the FOMC on Wednesday and the statement by Jerome Powell. And then in the evening, we basically repeated that video. We wanted to see to what extent we would get additional views and whether we'd get more or less, depending on a slightly different thumbnail and a slightly different publication. And we will do this from time to time, but we will make it very clear in the introduction that it is a repeat video, in which case, at worst, you've used maybe 20 seconds or 30 seconds of your time if you've listened to the previous one, and if you haven't, then it's raising it to your attention, because we have noticed, without a doubt now, particularly as we've been publishing in the morning, that YouTube is not promoting our videos that strongly, because it wants, upon initial publication, it wants a rush to the video to show its popularity. And of course, we have to confess that when we produce our morning updates, it's essentially our morning, and most Americans, which constitute a large part, the largest part of our audience, are still in bed. So they're not actually looking at that until many hours later, and YouTube are regarding that as being unpopular. That's it for now. Just a reminder, tomorrow we have our weekly update. We'll also be producing an additional video tomorrow, basically on what is generally happening across the world in terms of bank finance and QE. And on our Crypto Plus channel, we'll be talking more about Germany allowing institutional funds to enter the market. And on Sunday, we'll have a review of Nikki's crypto portfolio, which has changed quite dramatically. Thank you so much for listening. Please give us a thumbs up, comment, subscribe if you haven't done so, press the bell sign, and have a great day. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.